Welcome to another edition of Invest or Not to Invest, where we talk about the latest updates and developments on small to mid-cap companies in Canada that you might not want to miss out on. So we're going to kick off this week's show with a Canadian pharmaceutical company whose stocks rose over 200% in a month, which then got them on our radar, and they go by the name Valeo Pharma, a Quebec-based firm trading under the name VPH in the Canadian Securities Exchange. Why the jump and what is it they do? Well, they are a specialty pharma company that commercializes prescription products in Canada. Their model basically works like this. They find companies that have products in established drug markets that aren't in Canada, and after establishing a partnership with that company, they get the license to commercialize and market that product in Canada. So basically, they avoid the time-consuming and costly procedure of an almost never-ending research and trial phase and skip straight to the approval and sales phase. So as an example, let's take the latest product they got the go-ahead for, called Asperco. Back in April, they entered into a licensing agreement with Engineer Pharma to commercialize this drug. Not so long ago, they filed for a natural product license with Health Canada, and soon after that, it was approved. So expect to see that product on shelves pretty soon. Now, if you're wondering what this drug does, well, it's aimed at boosting the immune system and primarily derived from the skin of an immature citrus fruit. So basically, commercialization is what they are mostly focused on. It's the same scenario for their other products like Reza, which is a medication used in the prevention of blood clots, and this one is expected to launch in Q1 of 2021. Now, the peak sale for this specific product is $30 to $40 million, and the sales margin is 55 to 60%. So whatever they make, they walk away with just a little over half of the revenue from that product. Have they grown since their establishment? Well, here's a very brief history of what they've done. They started in 2003 and focused on dermatology and hospital products. They sold their entire product portfolio to Valeant in 2014 for $27 million, then went back to business focusing on neurology, oncology, and hospital specialty products. In 2018, their revenue grew to $4.4 million and increased by 50% the next year to $6.6 million. And in that year, they were listed on the Canadian Securities Exchange. With all that said, they are expected to break even in late 2020. So that's a quick overview of their journey. But what about their stocks? Well, in the last 6 months or so, their share prices rose over 200% from approximately 30 cents to roughly $1.10, and even climbed to $1.73 at the end of July. That's a 440% increase. How high or low it will go will always remain a question, but we did stumble upon a report by IA Securities, which is a Canadian financial firm that offers a comprehensive range of financial products tailored to their clients. And you might want to know that in their evaluation, they put Valeo's price target to $2.30. Food for thought. From pharmaceutical companies to mining now. Now, mining companies are a bit tricky. This is because the products that they offer is not something they produce, and a company dealing with natural resources such as precious metals barely have any power over the pricing of their product. But if you do strike gold, then that's a game changer, but that is if you strike gold, figuratively speaking. So in conclusion, revenue for mining explorers, or juniors as they are referred to in this biz, is not consistent, and the cost for operations may outweigh returns, meaning it may cost you more than what you can make, kind of a deal. This doesn't mean that investing in mining companies is not a smart move. It is still considered a hedge against inflation, but invest in something you know enough about. Anyways, why do stocks for companies like Globex Mining Enterprise look like this? GMX are trading in the Toronto Stock Exchange and have been around for quite a long time. So has the industry too, of course. When you check out their press releases and portfolio, they are a pretty busy bunch. These guys mine for all sorts of things, from precious metals, base metals, as well as specialty and industrial metals and minerals. And that includes manganese, which is pretty much a hot commodity right now. They have 189 projects under their belt, and that's not all though. They also have 68 royalty projects, which in short means that they allow other companies to dig and drill on their property, and when those companies hit the jackpot, Globex gets a cut too. Now, if we go back to the numbers though, in the past 6 months, their share prices were about 30 cents, and that climbed to 70 cents per share, basically doubling in that time span. How far will it go up depends on the demand for their stocks, the company's success, and a lot more of other factors too. There are currently about 54 million Globex shares outstanding, 57.5 fully diluted, and since 1983 the company has kept the dilutive financings to an absolute minimum, and there has never been a single share rollback. In simpler terms, they have issued a few new number of shares, and they haven't increased the prices of shares either. In mid-September, they announced that they have acquired 15 manganese claims in New Brunswick, Canada, and soon after that, they received a year 2 option payment from Exelon Resources for the Bronsdorf Silver Project located in Saxony, Germany. But like any investment opportunity, you should consider the political atmosphere of the location, see how well financed the projects are, the market cap versus estimated value of the mineral resource, the volume of trading, and so forth. So make sure you do dig deep for info before making any moves. And last but not least, love gambling? Then we move on to FansUnite, who describe themselves as a sports and entertainment company focusing on technology related to regulated and lawful online sports betting, casino, and other related products. Now, they're trading under the ticker FANS in the Canadian Securities Exchange. They offer B2C social betting where their members can place their virtual bets in a large online community, and they also offer B2B back-end for other businesses that would want to utilize their platform for their own betting business. Not so long ago, they have announced that their Scottish-based McBookie subsidiary has increased year-over-year turnover for the months of July and August by 108% from $3 million Canadian to $6.3 million Canadian. They've also closed a $27.7 million share-only acquisition of Ascot Gaming, the company that packs the Chameleon gaming platform, which was shortlisted for the 2020 EGR B2B Awards for the eSports Betting Supplier of the Year. That platform is engineered for the next generation of online betting, mind you. We also spoke to the CEO of FansUnite to get an overview of what to expect in the coming months, and it seems like they are expanding to US markets and also Europe as well. So when you look at their stocks, why has it dropped to half of its value since its first commenced trading? Strange, right? Well, to be honest, it still is in a downward trend and has been for some time. Now, Vishal Tora, our trading expert, explains in his article that prices cannot move down forever and markets move in cycles. And since he's a trader, he tries to find signs of one trend exhausting. And for FansUnite, there may be an uptrend on the horizon. But when remains a question. If you want to delve deep into the details, you can check out his article via a link in the description below. But a closer look into what may have happened, one assumption could be that the company diluted its shares to raise capital to expand, hence the recent acquisition of Ascot Gaming and, well, stepping on a bigger international stage. But you could also consider the fact that FansUnite did issue warrants for a price tag of 46 cents per share, which left those holders with options with a bit of a margin, and they may have cashed out at that point and maybe others just followed suit. It would only be a good deal if it's expected to climb back up once again. But overall, global online sports betting is expected to grow into a $100 billion industry by 2025, and with competitive sports back in business again, time, due diligence, and faith may be a vital factor if you want to take a stake in their shares. But if you're still up for a gamble, that's up to you. Well, guys and gals, millennials and madmen, that's it for today. Do leave us comments, concerns, or compliments, and do not forget to push that subscribe button. See you next time.